All right, folks, it's been a roller coaster of a session as we wrap up another big week that was full of even bigger wild swings. Now, I think a lot of this market movement, though, to be quite honest with you, has to do with the Fed not being more accommodative. I want to bring in Nicholas Wealth Management, David Nicholas. And David, here's what I'm talking about. Everyone forgets, but let's walk through Wednesday's session when they had the FOMC. The market opens lower. The S&P was down 38 to around 31.81, down 26 points, hour and a half into trading. And then we turned around. We actually began to roar. Right as that Fed announcement came out, the market rocketed. We were up 40 S&P points from that session low. But then when that question and answer period happened, all those gains faded, and we actually saw the S&P close down 31 points from the high, 17 points for the session. And for the Dow, we're talking about 300, almost 350 points from the high of the session. You know, I think the market wants Powell to be clearer with respect to the Fed potentially using these yield caps or any other measure. And really, they did not expect or want him to talk about caps on bond buying, despite the fact it's $120 billion. I think that, unfortunately, Wall Street is so addicted to the Fed, David, that they want it more.
Charles, well said. I mean, the market is hungry for liquidity. And so I think if there's any element that we see Powell back away from that, we see market sell up, but it's nothing new, right? If you look back over the last 3 to 5 years, I mean, we've had good earnings in the past, but the markets have been very tightly correlated to what the Fed says. So maybe we can release the numbers and just get rid of the press conference for a while. But I think the market wants it. But, I think obviously in a normal environment, earnings are what's going to drive markets. So I think in absence of that, the markets are looking for something else, and they're looking to the Fed for guidance.
Maybe it wouldn't have been so crazy, but Powell's so dour about our economy. And then today, Tom Barkin said the pandemic could go beyond the next couple of months. Jobs, some won't come back ever. So the rhetoric is not necessarily matching the action. I'm running out of time, David, but I want to know the things that are most important in your mind as we go into the last hour of trading.
Yeah, I think today's important. Always going into the market, the weekend, it could be interesting for investors. I think duration is key. I think time will pay off here for investors. I think to find the companies that you like, that you want to earn, that are quality. I think as we get into the fall, absence of something, we'll see markets go higher throughout the end of the year.
All right, my man, it sounds like you're saying stay the course and things are going to get better. David, wish we had more time, but I do appreciate your thoughts. They're always fantastic.